Welcome to the deep dive. Today we're getting into the thinking of Peter Lynch, the legend from Fidelity's Magellan Fund.
An absolute giant in the investing world.
Right. And our goal here is pretty simple. Pull out his key ideas for you, the learner. We're talking practical advice, stuff you can actually, understand and maybe use.
Yeah, and what's great is we're looking at his core ideas. They're really grounded in common sense and thinking long term, not overly complex.
Exactly. So let's jump in. But probably his most famous idea, invest in what you know. What's the real gist of that?
Well, it's about leveraging your own life, really. Your experiences as a consumer, maybe in your job. You see things working or not working often before Wall Street does.
Okay, so you notice, say, a local coffee shop is always packed, then they open another, that kind of thing.
Precisely. That's an observation, right? A potential lead.
Huh.
Lynch thought individual investors have this edge seeing trends develop on the ground level. It's a starting point for research, not the whole story, but a vital first step.
Got it. So it's using your eyes and ears first, before just chasing, the hottest tech stock everyone's talking about.
Which ties into his other big concept, GARP. Growth at a reasonable price.
GRP. Okay, break that down. What's the key there?
It's finding companies that are actually growing their earnings, their profits, pretty strongly.
Okay, real growth.
Real growth, yeah. But crucially, the stock price hasn't gotten totally out of whack. It's not wildly expensive compared to that growth.
So you're looking for quality performance, but you don't want to pay an arm and a leg for it.
Exactly. You're being selective, not just buying the most hyped up, pricey names. It's about finding solid value alongside that growth potential.
Makes sense. Then there's the term, he's famous for the 10-bagger. Sounds ambitious.
It is. That's the home run, right?
Yeah,
a stock that goes up 10 times what you paid for it.
Wow. Where did he think you find those?
Often, he believed, in smaller companies with a lot of room to grow, maybe newer businesses disrupting an industry. But the key thing here, and it's really key, is patience.
Ah, okay. It's not a get-rich-quick thing.
Definitely not. Finding a potential 10-bagger is one thing, but you need the conviction to hold on to it for, maybe years, to let that growth story actually unfold. Long-term view is essential.
Which brings us neatly to doing the actual work. Do your own research. You can't just rely on noticing that busy coffee shop, can you?
No way. That's just the initial spark. Lynch was huge on fundamental analysis. You have to dig into the company.
Like what specifically? What kind of stuff did he look at?
Oh, the financials, for sure. Earnings growth, obviously. How much debt does the company have compared to its equity? What's its competitive advantage? Does it have a strong brand, unique tech, something that protects it?
So really understanding the business behind the stock ticker.
Absolutely. Rolling up your sleeves, doing the homework, that's not negotiable in his book.
And that homework, that understanding, it fuels the long-term perspective, doesn't it?
It has to. If you've done the research and you believe in the company's future, you're less likely to panic during, the market's inevitable ups and downs.
Right. You don't get spooked by short-term noise.
Exactly. Lynch wasn't about reacting to headlines or trying to guess the market's next move day to day. He focused on whether the business was performing and had good long-term prospects. You need time for that to play out.
Which sounds like why he advised people to avoid market timing.
Yeah, he thought it was mostly a fool's errand for individual investors, trying to perfectly time buying low and selling high, almost impossible consistently.
So just stay invested.
Pretty much. Focus your energy on finding good companies and understanding them, rather than trying to predict the unpredictable swings of the overall market. Time in the market, not timing the market.
Okay. Now, he also had this framework, these categories for stocks. Can you give us the quick version of those?
Sure. He liked to bucket companies to understand them better. You had your slow growers, big, stable, maybe dividend-paying companies, but not much growth. Think like a utility. Then stalwart, solid, reliable growers, like maybe a Procter & Gamble. Not explosive, but steady. Fast growers, these are the smaller, more aggressive growth companies. The potential 10-baggers often live here.
Right.
Cyclicals, their fortunes rise and fall with the economy, like car companies or airlines. Turnarounds, companies that were in trouble but might be recovering. High risk, potentially high reward. And finally, asset plays companies where the value of their assets, maybe real estate or cash, wasn't fully reflected in the stock price. Understanding the category helped him know what to look for and what to expect.
That's a really useful framework. So let's quickly recap the core Lynch ideas. Invest in what you understand from your own life.
Use that as a starting point.
Look for growth, but don't overpay that GARP approach.
Yep. growth at a reasonable price.
Do your homework. The fundamental research is crucial.
Absolutely essential. Dig into those financials.
Think long-term, have patience, and don't try to time the market.
Right. Stay focused on the businesses.
And maybe use his categories to help analyze different kinds of opportunities.
Exactly. It provides a helpful lens. It's a very empowering philosophy, really.
It really is. Okay, so here's something for you, the learner, to think about. What businesses do you interact with almost every day? Shops, services, products you use? Which ones seem to be doing really well based on what you see?
Yeah, just look around you.
Could any of those be a Peter Lynch style opportunity? And thinking about his principles, what kind of research would you need to do next to find out if there's a real investment story there? Something to mull over. Thanks for diving deep with us.